Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY ended 2025 with its weakest annual performance in nearly a decade, falling 9.5% and briefly hitting a 3.5-year low at 96.22. The main driver has been growing monetary policy divergence as overseas economies recover faster, while the Federal Reserve moves towards a looser policy stance. Looking ahead to 2026, the dollar's downward trend is expected to continue, but at a much slower pace. That said, downside risks are not one-sided. Potential policy shifts, including large-scale US tax cuts, or renewed investment momentum in AI could revive US growth expectations and reduce the need for aggressive easing. Historically, a similar pattern played out in 2017, 2018, where a weak year for the dollar was followed by partial recovery. In the short term, the dollar remains weak and volatile, with momentum indicators still pointing to underlying pressure. Next up, let's have a look at crude oil. WTI has started 2026 trading in a tight range around the mid to high 50s. The market continues to balance geopolitical risk premiums against persistent headwinds from ample supply, inventory accumulation, and increased drilling activity. After recording its largest annual decline in 5 years, oil prices appear to be stabilizing rather than trending decisively. OPEC remains in focus ahead of its upcoming meeting, where current production policies are expected to remain unchanged. Geopolitical tensions involving Venezuela, Russia, and Ukraine continue to provide some background support to crude, even as weaker holiday demand and high storage levels cap upside momentum. Overall, price action suggests consolidation and range-bound conditions rather than a clear directional move. Next, let's have a look at gold. Gold capped off 2025 with an exceptional performance, rising roughly 64% for the year, which is its strongest annual gain since 1979. Although prices pulled back late in the year due to profit taking and higher margin requirements, the broader bullish structure remains intact heading into 2026. Federal Reserve rate cuts, elevated geopolitical risks, and persistent global uncertainty continue to underpin long-term demand. From a technical perspective, gold remains supported above key moving averages, with momentum indicators stabilizing above mid levels. While short-term consolidation may persist, the overall trend remains constructive, with the path of least resistance still pointing higher over the medium to long term. Lastly, let's have a look at the Australian dollar, which ended 2025 with a near 8% gain, marking its strongest year since 2020. Expectations around potential RBA tightening and China's gradual adaptation of US tariffs continue to support the currency into the new year. Market attention now turns to upcoming Australian CPI data, which could influence the RBA's policy outlook ahead of its early Feb meeting. Technically, the Australian dollar remains in an ascending channel and continues to hold above key short-term moving averages. Momentum indicators remain firm without showing signs of any exhaustion, which suggests that the broader bullish bias is still very much intact, even as the pair consolidates around the key psychological levels. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.